The Sensex just 737 points away from its record high, with across-the-board buying taking nearly all indices higher this month. A lot of this is due to the return of FIIs, who've pumped in nearly 37,000 crore rupees in Indian equities this month. BTTV's Udayan Mukherjee spoke to Sunil Singhania of Abakkus Asset Management about all the cheer that we're seeing in stock markets.
Markets have bounced back and within striking distance of all-time highs. What do you think has caused this flourishing out of relief in the market? Is it because some of the global headwinds have receded, or do you think there is greater confidence in the earnings story now?
So I think Udayan, 22 obviously was a very challenging year, and the first quarter we started with optimism, and then you had the Silicon Valley Bank and some of the other banks going belly up, and on top of it we had this whole concern about the debt ceiling. I think as we move forward, second half, according to us, is going to be pretty decent in terms of positive news flow. One is inflation is surely out of the way. We have already seen the peak, and just by base effect, I think the second half, starting June itself, we'll start to see inflation surprise positively, with the headline numbers coming in much lower. And the same trajectory would therefore be repeated on the interest rate side. And I think now with the debt ceiling also issue at least temporarily behind us, I think the risk off which we were seeing is now back to risk on. Technology companies, particularly the large tech, have seen a big rebound. And I think generally investors are now getting more confident that the second half of 23 should be much better for the global economy than what we have seen over the last 18 months. So I think it's a combination of a lot of things. And obviously India has benefited out of it. We have seen flows, come back in a vengeance. I think May will be almost a $5 billion positive FII flows after a long, long time. And again, our indication with speaking to a lot of global allocators is one of optimism as far as flows into India is concerned.
You mentioned the elections, Sunil. At some point as we get towards winter, I think it will become more and more of an issue, at least a talking point for the market. How do you see that affecting market performance over the next 12 months or so?
So traditionally in the run-up to the elections, the markets tend to do well. This time should be no different. Obviously, the markets are going to debate what is going to happen, and obviously the one thing which the markets would love is continuity, and that seems to be also a big probability. But elections are elections; one doesn't know. So I think towards the end of the calendar year 23, which is when most probably the dates of the elections and all will start to be speculated of when it is going to happen, and all the permutations and combinations of who's going to align with whom will start to play in. I think there might be a little bit of nervous, maybe for a couple of months till there is clarity. But I think there is a reason to be more optimistic than pessimistic at this point of time.
What would be a good way to position the portfolio now? I mean, if your belief is that some of the risks have receded now and the global factors have settled, is it a good kind of a overall macro construct in which you start backing small caps and mid caps again over large caps, because it seems a bit more of a stable situation for the market, or not quite?
So then last 3-4 years have been a yo-yo kind of years. We had one good year, and then, we had two challenging years because of COVID. And then we are just coming up as far as recovery is concerned. And even this recovery has been full of, I would say, news flows which have been challenging, right from interest rates going up quite significantly, and some large financial institutions like Credit Suisse and some regional banks in US going belly up. So it's not been a smooth last 4-5 years. I think the next 3-4-5 years look to be much more stable. And in that context, I think if India continues with the way it is doing, and this whole focus on manufacturing and infrastructure development, and even this whole talk about 2047, which is 100 years of independence, India being targeted as a developed country, I think even if we go in that direction, I think the next 4-5 years can be really path breaking. If we have like 3-4-5 years of constant 7% plus GDP growth rate, then some of the sectors and some of the companies can really become much larger than what they are. So we are looking at it with a lot of optimism. Obviously, the whole focus is going to be on domestic economy and domestic related sectors, but India is also coming out quite visibly as a big beneficiary of the China plus one and the Euro plus one manufacturing, I would say, move. We have already seen large companies like Apple and Tesla indicate their intention of setting up manufacturing bases in India. And I would say that would be the catalyst which India needed to go really, really, fast in terms of their growth. I definitely do believe that next 5 years have the potential of India looking at growth like never before.
You've always been a fan of the manufacturing theme, Sunil, and you can find a lot of interesting mid caps and small caps as a portfolio manager which can benefit from the manufacturing theme. So could you tell me what are the best hunting grounds for you? I mean, because you could play manufacturing through various kinds of themes. Which are your favorite ones?
So, unfortunately, within this segment or this sector or, this theme has been quite in the talk as far as market participants are concerned for the last 1.5 years. And not too many stocks are cheap. But having said that, I think manufacturing is benefiting from multiple reasons. One is I mentioned to you this whole move towards China plus one and Europe plus one. So exports, as and when the global economy revives, look decent. Right now, the global economy has been quite slow. So exports have not been that buoyant, but that will change. Second is obviously the raw material and the input costs are coming down, which should, help, I would say, the margin front. And I think overall, there is going to be, a scale benefit, which in some of these Indian companies get. So the advantage which India has is that it has a huge domestic market. And then, if exports do happen, that is, sort of a cherry on the cake. From our perspective, obviously the engineering side, we are quite optimistic. We are also optimistic on the traditional Indian, I would say advantage sectors like IT services. We all know that Chat GPT and all are near-term threats, but India has global competitiveness as far as IT services is concerned. And then you have garments and chemicals and pharma, which again are strong points as far as Indian manufacturing is concerned. So all these can be, really good. Apart from the export side, I think, import substitution can be a big thing. So, electronics, we're already seeing how the EMS space is flourishing as far as markets are concerned. Stocks are just surging. And same is the case with defense. I think from our side, we like both the spaces, but in the near term, there is a little bit of over exuberance. So we'll wait for a cool off before we look at this. But as I said, India offers opportunities across sectors.
If you like the video, do like, comment, share and subscribe.